Slay your heroes, zoom out, and just keep stacking sats. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Guten Tag, buenos dias, morgen, and welcome to episode 185 of the Bitcoin Bulletin Podcast. I am once again on the road. I am coming to you from an undisclosed location in the high desert of New Mexico. So I'm going to try and keep this a tight rip, but there is certainly a lot to talk about today. And of course, we have our weekly DCA Wednesday stack to make. But before we do, let's take that customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 867,068, and Bitcoin is ringing in at 66,590 US dollars, or 1,502 sats per dollar. So while the price is down in the last couple of days, with Bitcoin having marched upwards in the last over the weekend or whatever, but it's really about $1,000 less than last DCA Wednesday, but still about $5,000 higher than the DCA Wednesday prior to that, and about $6,000 higher than the DCA Wednesday prior to that. So again, I always say zoom out in general, and even just in the last month or the last year, Bitcoin is continuing to go up and to the right. In fact, Bitcoin is up more than 100% over the last, not year to date, but the last 365 days. So there is a lot of panic. I saw some people, including Whale Panda on Twitter, tweeting about how disappointing this quote unquote October was. But, you know, Bitcoin's just doing Bitcoin things. And we're going to get into more about that when we're done with the vital statistics. So before I get too distracted, let's carry on. Bitcoin's current US dollar value gives it a market capitalization of $1.32 trillion. So that is a little bit less than the $1.34 trillion last DCA Wednesday. But that was the first DCA Wednesday in a very long time that we had seen Bitcoin above the $1.3 trillion market capitalization level. So for the vast majority of the summer, it was in the 1.15 to $1.2 trillion range. I think even as low as 1.08 trillion back in August. So remember to zoom out, have that big picture. And I'm as guilty as anybody of following the markets, following the Bitcoin price on a daily, if not hourly basis. Although it's been kind of refreshing because while I'm on the road, I think I went more than 24 hours, almost 48 hours without ever checking the price of Bitcoin a single time. Certainly while I was traveling, while I was actually flying here and the on the road portion of being on the road, I was just busy enough that I didn't feel the need to incessantly check the price. And so that's good, but obviously it's my job to stay up to date on things like that. So that's one way that I can justify it. They always say, don't look at the price, don't obsess with the price. And that's easier said than done. But, and even I say that quite frequently. And of course, I guess that's one of those do as I say, not as I do kind of things, because I'm certainly guilty as charged, although it was very refreshing to realize last night that I hadn't looked at the price of Bitcoin in like 2 days. So there's that. But once again, I digress. For those of you who continue to value your wealth in shiny yellow rocks, and I know the gold bugs out there have been celebrating, the price of gold increasing in US dollar terms, but it will currently cost you 24.1 ounces of gold to purchase just one Bitcoin if you wanted to trade some of those Peter Schiff bucks into the digital version of gold, the most sound money ever discovered. And of course, Bitcoin is continuing to demonetize gold, to overtake gold. Still quite a ways to go before we would be anywhere near gold's total market capitalization. But again, zooming out, even with gold setting a quote unquote new all-time high in the last week or two, it still continues to trend to zero in Bitcoin terms. I mean, it wasn't that long ago. I mean, we were doing this podcast when, when it was more like 10 ounces or less than 10 ounces of gold to purchase just one Bitcoin. So now it takes more than double that. So even though gold is in, they're relishing their quote unquote all time high, it takes ever more of that shiny yellow metal to purchase Bitcoin as time marches on. For those of you who value your wealth in pizza, one Bitcoin will currently purchase you 3,724 large pepperoni pizzas from Papa John's, more than one pizza every day for 10 years, or more than one pizza every day for more than 10 years, 10.2 years to be precise. Again, I'm not to beat a dead horse here, but I've repeatedly said that if you were trying to spend your wealth, your Bitcoin wealth on pizza, and you were doing so at just one pizza a day, I don't think you would actually ever be able to spend all of your Bitcoin, because the number of pizzas that one Bitcoin will purchase is climbing faster than you can eat that pizza. That metric that has been my favorite for most of this podcast, Bitcoin's 24-hour average transaction rate, it's still cranking along at 7.9 transactions per second on average, but that is down a bit from the 8.31 transactions per second that we saw last DCA Wednesday. And I've always said correlation does not necessarily equal causation, but for the entire history of this podcast, almost without fail, every time the price of Bitcoin is trending down, that has been corresponding with a slightly lower transaction rate, and every time that the transaction rate was higher, the price of Bitcoin was trending up. And so we're down a little bit from last week's 8.31 transactions per second, and Bitcoin's price is down. But it's still a really healthy 7.9 transactions per second. And in general, over the last couple of weeks, Bitcoin's price is up. On the weekly chart, the monthly chart, the yearly chart, the price of Bitcoin is continuing up and to the right. And of course, $66,000, depending on where you got your data, was, some exchanges, some sources were showing $66,000 was last cycle's all-time high, and then others were showing $69,000, depending on whether they were going by like quote unquote daily close, or however they determined prices and what exchange data they were using. But either way, we are still, approximately in that all-time high range from the last cycle, which is pretty cool considering that a lot of people are lamenting that Bitcoin is down today. And speaking of on-chain activity, the mempools are a lot more clear than they were last DCA Wednesday. If you remember last DCA Wednesday, the mempools had exploded with more than 200,000 transactions in Clark Moody's mempool. Currently, he's showing 96,483 transactions, less than half of the transactions that were in the mempool last DCA Wednesday. And mempool.space's slightly larger mempool is showing 200,272 transactions, down by about a third from last DCA Wednesday when there were 300,283 transactions in their mempool. So still a lot of transactions, still a lot of blocks that would needed to clear out those transactions, but obviously that is indicative of healthy on-chain activity, Bitcoin being used on-chain. If you do need to send an on-chain transaction, Clark Moody's fee estimator is saying that it will take a fee of 20 sats per VByte to guarantee that you're in the next block. That is exactly half of what it was recommending last DCA Wednesday, when they were saying it would take 40 sats per VByte to guarantee you're in the next block or two. They are still saying that a fee of just 2 sats per VByte will be mined within a day, or certainly within a week. Mempool.space's fee estimator is telling that slightly different story as usual. They're saying that a high priority transaction only needs a fee of 10 sats per VByte. That works out to about 93 cents in US dollar terms. Now remember, last DC Wednesday, their high priority fee recommendation was a whopping 369 sats per VByte, which was almost 35 US dollars. And of course, that was a little bit of an anomaly because it had been almost an hour since the last block had come in. And I had postulated that when blocks started coming back in, that would drop radically. And it did. I think I saw fees as low as 3 sats per VByte just in the last few days that were being mined into blocks. I did an on-chain transaction between these two episodes, and I set it at 6 sats per VByte. And I think it took 2 blocks for my transaction to be confirmed, even though the fee estimator was saying that the lowest fee was between 7 and 8 sats per VByte, depending on where you got that data. So if you do have an on-chain transaction and it needs to clear right away, make sure you have the most up-to-date information available. And of course, even if you do, just like last Wednesday when we had a big lag between blocks, when it was over 40 minutes, almost an hour between blocks, all of a sudden, then those fees can spike. And of course, regardless of whether the fees spike or not, if you need if there's nothing you can do, if it takes 40 minutes for a block to come in, it's going to take 40 minutes, regardless of what fee is set. However, if you do lowball your fee and it's not being confirmed fast enough, there are ways to increase your fee. So before you do that, make sure you're familiar with those methods, like replace by fee. A lot of wallets will enable you to do that. I think it's by default in the wallet that I use. And if you don't enable replace by fee, you still have the option of going to mempool.space and using their transaction accelerator, where you can pay in Satoshis on the Lightning Network, and they will guarantee that your transaction is then mined in the next block. In fact, you can accelerate any transaction. It doesn't even have to be one of yours. You just pick the pending transaction. It tells you what the fee is going to be, and if you pay it, they bump it. So that's really cool. Since the last DCA Wednesday, the difficulty it takes to mine a block of Bitcoin was increased by about 3.9%. Currently, we are 1,828 blocks away from the next mining difficulty adjustment, so not quite 2 weeks, about 12 days if blocks continue to come in anywhere close to their 10-minute average. So that should be about November 4th. And depending where you get your data, that's going to be another increase of anywhere between about 1.85 to 4.7%. And that is because blocks are coming in faster than that 10-minute average that the Bitcoin Core protocol wants to see. Currently, during this halving epoch, the average block time has been 9 minutes and 36 seconds. If that continues or gets worse, faster, then of course we will see a higher difficulty adjustment. If we get a few really slow blocks or maybe a little bit of hash rate tapers off, then, who knows? 2 weeks away, almost the full 2016 block period of that epoch to go. It's really too early to tell. But just like Bitcoin's price, if you zoom out, Bitcoin's network security, Bitcoin's network hash rate has been trending up and to the right. And even on a weekly basis, Bitcoin's current estimated hash rate is 649.5 exahash, up about 4.7 exahash from last DCA Wednesday, and up over the 2 previous weeks as well. So, the network hash rate continues to climb as more miners are turned on, or older aging miners are replaced with more state-of-the-art miners. And so it would follow that most likely we're going to see a difficulty increase. The only question is how large. Of course, if we have a weather event in Texas where a lot of commercial mining operators are located and they shut their mining operations down in agreement with ERCOT, the grid operator, to save electricity for other customers, then that can change that as well. Almost like a black swan event impacting the price of Bitcoin, it temporarily could impact the hash rate. Now, that only really matters if you're mining at home or you're a large commercial miner. Again, whether regardless of what the hash rate is, whether it's increased or decreased, even though the Bitcoin protocol shoots for 10 minutes on average, again, like last DCA Wednesday, it had been more than 40 minutes between blocks. So regardless, that is an average. It's kind of luck of the draw. So if you have a high priority transaction, the difference between 9 minutes and 36 seconds and 10 minutes is negligible, considering sometimes blocks come in at 2 minutes between blocks, and sometimes they take more than an hour. Real quick, I want to take a minute to thank those of you listening on your favorite Podcasting 2.0 app, such as Fountain. Podcasting 2.0 allows you to support this podcast through the value for value method by either streaming Satoshis on a minute-by-minute basis as you listen. Basically, you determine what you think you're getting in value from listening to this podcast, whether you think it's worth 1 Satoshi per minute or 10 Satoshis per minute. That's something that you determine, and then you just set it and forget it, and it automatically streams sats as you're listening. And that's really cool, because if I'm looking at the the Fountain wallet for the podcast, I can see those sats coming in, and that means I know someone's listening and that someone's contributing value back. However, most people that do choose to support the podcast through the value for value method choose to do those through the boost method. And while it's fun to watch sats stream in, boosts are really cool because boosts are basically a shout out where you send a message to the podcast. Let me know what you think about the podcast, or just say whatever's on your mind. And because it's a Lightning transaction, that shout out comes with some Satoshis. So we have had several of you out there that have been regular supporters of the podcast. We do not have a boost to read this episode, but thank you to all of you who are listening, especially to those of you who have supported the podcast from time to time. Each and every one of you are deeply appreciated, even if you're just listening completely anonymously. It is cool to know, who you are, or at least what your NIM is, when you do support the podcast, even more so than the Satoshis. The Satoshis are really cool. I treasure each and every one of them, but it's fun to hear from you because that's the reason I do this podcast. I like to talk about Bitcoin, and I like to have an idea who's listening, who is here every week stacking alongside us. Speaking of our listeners, our geographic distribution of listeners has been changing the last couple of weeks. Usually it's been ossified and we go months and months without any changes. But last DCA Wednesday, we had a bit of a change. And again, this DCA Wednesday, we have a couple of changes. Our top 10 countries where our listeners are located are as follows. Number 1, as usual, has remained the United States, where more than half of you are listening. So thank you to all of you listening in the United States of America. Special shout out to those of you Bitcoiners listening in the land of enchantment in New Mexico, where I'm visiting. If you're a New Mexico Bitcoiner, send me a DM on Twitter at BTC Bulletin Pod, or an email at bitcoinbulletin@protonmail.com, and let me know if there's anything Bitcoin related going on, because I'm pretty busy while I'm here. I came here for a very specific reason, but it would be fun to link up with a Bitcoiner or two, with a couple plebs while I'm here. So if you're in the 505, Albuquerque, Santa Fe, or the surrounding areas, let me know what's going on. Number 2, this is a change. Argentina has moved up to the number 2 spot. I guess that's Argentina has reclaimed the number 2 spot. Last week, Germany was the number 2 spot, but this week it's Argentina. And so muchas gracias, amigos, for listening in Argentina and reclaiming the number 2 spot. Number 3 now is Germany. So Dankeschön, mein friends in Deutschland. Number 4 is the same as last week. That's Canada. So hello to all of you in the frozen Great White North listening. Number 4 is the same as number 5 is the same as last week, and that is Luxembourg. So Dankeschön, mein Freunde in Luxembourg. Guten Abend, I guess, or Morgen to those of you who speak Luxembourgish. Number 6 is a big change. Last week, the United Kingdom wasn't even in the top 10. Today, they are number 6. So thank you to all of you listening in the United Kingdom. You definitely stepped up to the plate, and you booted Australia out of the top 10. And we've got a few other changes as well, but thank you to all of you listening from the United Kingdom. Number 7 remains the same. That's Singapore. So thank you to those of you listening in Singapore, or Apakabar. Number 8 now is Spain. Spain dropped from the number 6 slot to the number 8 slot. But either way, buenas noches. Muchas gracias, amigos, in Spain. Number 9 is now Colombia. They dropped down from the number 8 spot. So again, muchas gracias, amigos, listening in Colombia. And Mexico drops 1 spot to number 10. So hola, muchas gracias, amigos, in Mexico. And of course, as I mentioned, Australia dropped out of the top 10 when the United Kingdom surged into the top 10. But either way, we have listeners all over the world, and there are several countries that are just barely outside of the top 10. And just because your country may or may not be in the top 10 doesn't mean that I don't value our listeners. I don't value you as a listener. It is really cool that we have such an international audience. And really, the list is so long. We have listeners in almost every country, places that quite frankly surprise me. So that's really, really cool, really, really flattering, really, really humbling that so many of you are taking your time to listen to me give you the latest news and my thoughts on Bitcoin, and to join us to grow our stack of Satoshis together. So once again, thank you from the bottom of my heart to all of you listening, regardless of where you might find yourself this evening. On to the news. Of course, as is always, what the average normie considers the news, or even the average pleb considers the news, tends to be the price. They say the news is the price and the price is the news. Again, I don't think I have to tell any of you to zoom out. It's a theme I've repeated in almost every episode. If you've been a Bitcoiner for any period of time at all, you know that in general, over time, Bitcoin has consistently gone up and to the right. And it has done this in its 4-year cycles. And if history continues to rhyme, we're just at the cusp of this next cycle's epic bull run. As I got into in quite a bit of detail in the last several episodes, including last episode, which I entitled, "This Time is Still Not Different." This time is still not different. I said almost a year before the halving that I didn't think that we would see Bitcoin eclipse its previous cycle's all-time high until later this fall, sometime perhaps around Thanksgiving or Christmas even. As usually, it's 6 months to a year before Bitcoin retakes its previous all-time high. Obviously, this time was a little different because we did so this spring on the backs of the spot Bitcoin ETF approvals. So, we got a bit of a pump with that. But like every pump that's a news-driven pump, we then saw a retracement, the whole buy the rumor, sell the news thing. And so Bitcoin pulled back. It would seem to be at 58K forever, as those of you that were part of the 58K gang know by the memes, or those of you that might have been frustrated by the 58K gang memes. But either way, I don't think that this Bitcoin bull market has even started yet. I think we're higher than we would be, that we had that golden swan event of the spot Bitcoin ETF approval. And if it weren't for that, we'd probably be in the 58K range right now. Bitcoin does its thing. It's marching up and to the right. But remember, many, many episodes ago, I said that, even during a post-halving bull run, even during that face-melting bull run, even during the euphoria phase, Bitcoin averages 7 significant pullbacks of like 25, 30% or greater each of the previous cycles. And of course, we haven't even gotten started yet. So as the OG Adam Meister at TechBalt on Twitter or X always says, remember, keep that long-term thinking, and Bitcoin always returns to its all-time high. I will say this, when it happens, it's going to be a lot of fun. It always is. And that's why they call it the euphoria phase. In the meantime, it is DCA Wednesday, and we have the opportunity to add to our Bitcoin stack below the previous cycle's all-time high. Below this cycle's all-time high, I guess. No, that happened before the halving. So before the previous cycle's original all-time high of around 69,000, again, depending where you get your data, and even below the spot Bitcoin ETF euphoria pump into the 70s. So we're just getting started. People will one day look back and say, you bought Bitcoin for $62,000, $64,000, $66,000, $70,000. You just got lucky. All right. Other than the price, the biggest, most controversial news, at least on social media, on crypto Twitter, Bitcoin Twitter, X, was Michael Saylor's comments on self-custody. I'm sure you've heard that in an interview on the podcast Markets with Madison the other day, Michael Saylor seemed to attack self-custody, or at least promote the concept of keeping your Bitcoin on an exchange or in another custodial solution, saying, quote, "I think when the Bitcoin is held by a bunch of crypto anarchists who aren't regulated entities, who don't acknowledge government or don't acknowledge taxes or don't acknowledge reporting requirements, that increases the risk of seizure." And what I think he was saying was, a lot of times Michael Saylor is attacked because MicroStrategy's Bitcoin and his Bitcoin are held in custody, in Coinbase custody, I believe it is. And I know Matt Odell relentlessly gives him grief. Even in person, he's attacked him for not keeping self-custody. And there are many reasons why he chooses to do so, not the least of which are that Bitcoin assets held on a company's balance sheet are required to be held in a custodian's, by a custodian usually. So he doesn't even have a choice. But I think he was maybe getting a little testy, and he was saying that, the kind of like when Vitalik attacked hardcore Bitcoiners as Bitcoin maxis, which he meant as an insult, but we've since adopted as a title that we hold, that it's an honor, it's a badge of honor. Either way, it sparked a lot of outrage, and I'm certainly adamant that if you don't have custody of your Bitcoin, that you don't actually have Bitcoin, the whole not your keys, not your coins, not your keys, not your cheese mantra. But I wasn't alone in that outrage. Hodlanot tweeted a tweet that I'm assuming had to have been directly related to this because it was shortly after the controversy arose, tweeting on the 21st, 2 days ago. You can't control other people's words or actions, but you can control how much you trust them based on their words or actions. That doesn't directly reference Michael Saylor, but he followed that up almost immediately with another post saying, any attempt to rationalize or promote the madness of trusting your Bitcoin with a custodian is a giant red flag. Control your keys. This is why we Bitcoin, for FF's sake. Jameson Lopp, who of course you know is a rabid promoter of Bitcoin self-custody and Bitcoin security and personal security, tweeted his reply yesterday, I guess. Bitcoin self-custody isn't just about being a paranoid mountain man. There are many long-term negative ramifications to convincing people to trust third-party custodians. 1. Centralizing coins into a few hands increases systemic risk of loss and seizure. 2. Bitcoiners get disenfranchised from participating in governance activities like running nodes or trading forks. 3. Ossification arguments are strengthened because institutions don't care about more advanced cryptographic features. And 4. Permissionless scaling gets deprioritized because we can just scale via trusted third-party IOUs. Self-custody is not merely important to individual Bitcoin holders, it's important for the continued strengthening and improvement of the entire network. Now, in a case, almost a case of the pot calling the kettle black, Vitalik chimed in, replying to Jameson Lopp's tweet saying, I probably did more than most to spread the quote-unquote mountain man trope. By the way, I consider those remarks of mine outdated, snarks, and AA changed the trade-off space completely, and I'll happily say that I think Saylor's comments are batshit insane. He seems to be explicitly arguing for a regulatory capture approach to protecting crypto when you have regulated public entities like BlackRock and Fidelity and holding the asset. All the lawmakers and law enforcement arms are invested in those entities. There's plenty of precedents for how this strategy can fail, and for me, it's not what crypto is about. So you know it's bad when Vitalik is schooling you on centralization and self-custody, because Ethereum is arguably incredibly centralized with the 70% pre-mine, the Ethereum Foundation, etc. So when Vitalik is calling you out on not being enough of a Bitcoin maxi, when he's the one that coined the term as an insult, that's pretty bad. Today, of course, Michael Saylor walked his comments back, or at least clarified them in a post on Twitter or X saying, I support self-custody for those willing and able, the right to self-custody for all, and freedom to choose the form of custody and custodian for individuals and institutions globally. Bitcoin benefits from all forms of investment by all types of entities and should welcome everyone. So that kind of jives with what I was saying about Michael Saylor's opinion about what he's not necessarily anti-self-custody, but he thinks that Bitcoin banks, Bitcoin custodians have an important role to play, and he is certainly entitled to his opinion. Moving on, in the news of the cost of living genre or inflation continuing to erode away at your savings or your ability to live a decent life, and certainly in the category of Bitcoin fixes this, Fortune posted on Friday, research shows cost of American Dream is staggering. The American Dream costs over $1 million more than most Americans will make in their lifetime. Their article goes on to say, if you want the American Dream, the house in the suburbs, 2 children, and a cabriolet in the driveway, it will cost you millions. The financial media site Investopedia has done the math and calculated that achieving those milestones now costs a staggering $4.4 million, over $1 million more than most Americans will make in their lifetime, according to the researcher. To put that into context, the top 10% of U.S. households have a median net worth of about $3.8 million, according to the Federal Survey of Consumer Finances for 2022. And the article goes on to break that down a little bit more. But basically, the long and the short of it is they're saying that it's getting too expensive to survive, that inflation is pricing out the American dream, pricing out home ownership, pricing out retirement, pricing out being able to raise a family for the average American. All of which are things that Bitcoin fixes, because if you were holding Bitcoin in 2022 and they were saying it would only cost $3.8 million to achieve the American dream over your lifetime, well, the value of your Bitcoin has increased dramatically since 2022, more than doubling in the last year alone. So while the American dream is getting further out of reach for those who save their wealth in cash, it is getting closer and closer for those of us who value our wealth in Bitcoin. So Bitcoin fixes this. Another headline that indicates the Bitcoin industry is starting to mature to the point that they are taking the initiative instead of simply reacting to government crackdowns or regulatory attempts at Bitcoin. Fox News ran the headline, Bitcoin miners launch ad campaign in swing states to boost crypto-friendly candidates. So Bitcoin miners are going on the attack. The Bitcoin miners are realizing that we're big and we're powerful and we have a large enough portion of the country, and they now have enough money in US dollar terms to actually throw their weight around a little bit. The article says a new pro-crypto political action committee backed by 3 of the biggest Bitcoin mining companies in the US is hoping to swing the election in favor of candidates who support their livelihood, with a large ad spend and aimed at a handful of political candidates supportive of the $2 trillion industry, Fox Business has learned. This week, the Bitcoin Voter PAC, the spending arm of the digital coin advocacy group Bitcoin Voter Project, launched 3 direct ads aimed at swing voters in Pennsylvania and Texas to sway races towards candidates who support the mainstreaming of digital assets, including former President Donald Trump, Texas Republican Senator Ted Cruz, and Pennsylvania Republican Senate candidate David McCormick. All 3 candidates have come out in support of crypto, and each has an A rating on advocacy group Stand With Crypto's website. So that is a big change over where we were 4 years ago during the previous halving cycle bull run and also a presidential election year when we were ducking and covering and fretting over the increasing attacks on Bitcoin and the S coins, altcoins, crypto space in general. So this is the way, as Bitcoin becomes more and more mainstream, as more big players get involved in the Bitcoin, as Wall Street soaks up more of the Bitcoin, which I don't like, but there are some positive benefits as those big Wall Street players become more invested in Bitcoin, more vested in Bitcoin. It is in their best interest to see the government promote pro-Bitcoin policies. Speaking of the political process, Cointelegraph ran the headline earlier today or late last night, as the case may be. SEC chair wishes Bitcoin a sweet 16 for white paper anniversary. Of course, the 16th anniversary of the Bitcoin white paper is still almost more than a week away, but just days away. That happened on October 31st, so a little bit premature. But what it does say is that SEC Chairman Gary Gensler, who has been leading the charge on cracking down on the crypto industry, going after custodians and on-ramps, it's a new world when you have the chairman of the SEC saying happy 16th birthday, basically, to Bitcoin. Okay, on to what makes today and every Wednesday so special, and of course today is DCA Wednesday. If you're just joining us for the first time, you don't know what DCA stands for. It is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. The whole time in the markets beats timing the markets philosophy. So our equal portion, we wanted to keep it simple. I wanted to show that anyone listening, regardless where you're at, can accumulate a reasonable stack, an appreciable stack of Satoshis. So I chose just $20 because I think most of you listen to this podcast. That's an amount that is reasonable. Obviously, investing or dollar cost averaging, doing any financial planning is a you do you thing. This isn't financial advice. If you're Michael Saylor, you wouldn't just stack $20 a week. So I wanted to keep it simple and the most relatable to the most people. But again, that's a you do you thing. Of course, our regular interval is weekly on Wednesdays to be specific. Again, that's a you do you thing. Some people DCA daily. Other people DCA, when you get your paycheck. So if you're paid every 2 weeks, maybe you DCA bi-weekly. Again, that's a you do you thing. But for me, weekly on Wednesdays seemed to be the most logical. And it certainly works out the best for a weekly podcast. All right, so since this podcast began all the way back in July of 2021, we have stacked 169 times. We've stacked 169 Wednesdays, converting 3,380 US dollars into a stack of more than 10 million Satoshis, 10,029,120 Satoshis to be exact. Today is going to be our 170th stack, and to do so as often as usual, I'm going to use the Cash App. Cash App is not a sponsor of the show. They may or may not be available where you're listening. Again, this is a you do you thing. Pick the service, the app, the exchange that you think fits your needs. For me, that's Cash App. I think they're the fastest, cheapest, easiest way to stack smaller amounts of Bitcoin, like just $20. They don't have the cheapest fees. So if you're going to stack a larger amount, maybe you want to consider an exchange where you can stack for less than half of what Cash App will charge you. But since we're going to stack such a small amount, they will let us transfer that Bitcoin to our hardware wallet when we accrue enough that it's worth it to stack, that we wouldn't just be putting dust in our wallet. And since they're going to let us do that for free, that totally makes up for the fact that they charge a little more in fees. So again, Cash App is not a sponsor of the show, but there is a referral code in the show notes. If you scroll down to the bottom of the show notes, there's referral codes for a variety of services. Cash App is one of those. If you sign up for Cash App using that referral code, I believe the current offer is you'll get $5 for free just for doing so, and the podcast will receive $5 as well. So you'll help support the podcast, and you'll get paid to do so. So I have Cash App open, so it's just a matter of, and I have money on Cash App, as is often the case, so it's just a matter of tapping Bitcoin, tapping buy, entering $20, tapping confirm, and boom, just like that, we've added another 29,399 Satoshis to our stack. A little bit more than the 28,870 we were able to stack last DCA Wednesday, so it's nice. We bought a little bit cheaper, a little bit more than $1,000 cheaper than last DCA Wednesday. And those 29,000 sats bring our total stack up to 10,058,519 sats. Of course, it also increases our average cost basis because, we're purchasing as Bitcoin goes up in value. So that's just the occupational hazard there. So our average cost basis went up by a little more than $100. It is now $33,802.19. So just about half of the current US dollar value of Bitcoin. And so that is not too shabby. Obviously, as the price of Bitcoin goes up, that average cost basis will continue to go up as well, but it's still significantly cheaper than the purchase price on our very first DCA Wednesday episode, where Bitcoin was around 39,000 US dollars. So we're still outperforming what we would have had we YOLO'd in, done a lump sum buy. And of course, if you're the sort of person that's in my shoes, where we're just buying only $20 a week of Bitcoin, you wouldn't have had the $3,400 that we've converted now to YOLO in. So realistically, if you had done lump sum investing, maybe you would have lump summed $100 or $200 or $500 and maybe even $1,000, but you would have done that a couple of times, and probably depending on when you were YOLOing in, been even worse off. But either way, DCA has resoundingly beat YOLOing in lump sum investing, and it's also showed that even if you're converting just $20 US dollars a week, we've stacked a really sizable amount of Satoshis, doing so slowly and surely, saying the old tortoise and the hare, slow and steady wins the race thing. The rabbit going in really fast stops and starts eventually gets passed by the tortoise that just keeps plodding along, even though the tortoise is dramatically slower than the rabbit. Even if we don't stack a single Satoshi more, even if we stopped our DCA Wednesday series, which I have no intention of doing, even if we didn't buy any more dips, Our current stack of Satoshis, when Bitcoin eventually breaks the $100,000 mark, will have a US dollar value of $10,058.51. That is dramatically more valuable than the 3,400 US dollars that we've converted into Bitcoin. When Bitcoin hits $1 million one day, which I firmly believe it will do, that it will go even beyond 1 million, the only question being when it does. But when it does, that stack, without adding a single another Satoshi, would be worth $100,585.19. Clearly a life-changing amount of money for almost anyone listening to this podcast. When Bitcoin goes to 10 million, that would be more than $1 million US dollars. And if Bitcoin goes ultimately to Fidelity's target of 1 billion US dollars, that stack of 10 million Satoshis would be worth more than $100 million. $100,585,190 US dollars to be precise. No arguing that that wouldn't be the best return possible ever on a $3,400 investment. Certainly life-changing money, even for a millionaire. All right, that's about it for this episode. I did need to keep it short and sweet because I am on the road, and like I said, the reason I'm on the road is because I had something really, really important to do. So I'm going to wrap it up. I know this is a little bit shorter than an average episode, but yeah, I've been going for 40 minutes now, more than 40 minutes now, so that's better than I thought I was going to do. Before I do, though, I want to ask you to help support the podcast by feeding the algorithm monster. Of course, you can do that by rating or reviewing this podcast. How you do that varies depending on which app you're using to listen. But making sure you're subscribed to the podcast, making sure you have automatic downloads enabled, and rating and reviewing the podcast will help bump this podcast in the algorithm and help it be featured to more people when they're searching for Bitcoin content to listen to. And hopefully will help orange pill some people. Of course, you can also feed the algorithm monster by making sure you're following the podcast on Twitter or X. On Twitter/X, we are at BTC Bulletin Pod. And of course, I like to hear from you. So even if you don't feel like sending a boost, you could send me a DM. I very much like to read the DMs on Twitter. My DMs are open. I do read them. I do respond. If you're not on X or Twitter, you can send me a good old-fashioned email. Again, that email address is bitcoinbulletin@protonmail.com. I check that regularly, and I do reply to all the emails we get. I have my email open right now, as a matter of fact. All right, that's it for this week. But don't forget to join us next Wednesday and every Wednesday while we grow that stack of Satoshis together, just 20 US dollars at a time. But either way, keep on stacking those sats, you sexy sat stackers.